Good day, students. Today we will be doing the topic of credit purchase returns. Just to start the lesson, I would like to just quickly do a recap of things that we previously dealt with about credit purchases. Right. So, can you remember what a credit purchase is? Right? So, a credit purchase is when we as a company purchase from a supplier a product or trading stock or equipment, and we do not pay them for it right now, we pay them for it later, right? So, that is purchasing on credit. We receive the trading stock as of now, but we will only be paying them later. So, that's a credit purchase. Then, can you remember what source document we use for credit purchase? Right, so the source document that we use for credit purchase is called an original invoice. So we just write it as an invoice because we as the customer receive the original and our creditor will keep the duplicate. Right, so invoice is your main source document for credit purchases. Then, can you remember what journal we used for credit purchase? So if you think carefully about it, a credit purchase, because we don't pay for it right now, it can't go in the cash payments journal. So it has to go in our credit purchases journal, right? Our creditors journal, so CJ. And that's something that you were taught in grade 9, right? We focused a lot on doing the CJ and then also the accounting equation effect from the creditors journal. So in our creditors journal, we would have our document, which is obviously our invoice with the number of that invoice, our date that the transaction took place on, our creditor. So let's say we're purchasing from ABC Supplies, it would be ABC Supplies. And then our main account there is our creditors control. So that would be the total that you're purchasing for. And then our sub accounts would then be whatever we are purchasing. So if we are purchasing trading stock, for example, it would go in creditors control and then trading stock as well. Right. Then we quickly think about the effect of this creditors journal or credit purchase transactions on the accounting equation. So if you remember correctly, on the accounting equation, we have our account debited, account credited, assets, owner's equity and liability, and then the effect thereof. So for credit purchases, we had, and we said debit the purchase. So for example, trading stock, because that's an asset, so it increases on the debit side, and then credit our creditor or creditors control because that is a liability and it increases on the credit side, right? Then on the accounting equation part, so the asset, owner's equity, and liability, we would increase assets by, for example, 800 Rand for the trading stock purchase, as trading stock is an asset, and we would also on the other side of the equation increase liabilities with the same amount, right? Then talking about booking this over into the general ledger, obviously in your general ledger you would have your creditors control account and you would have your whatever you purchase, for example trading stock. So you would do the same. So in your creditors control you would credit total purchases, CJ, for your creditors control, and then the amount for the total column in that journal. And then as well in your trading stock you would debit trading stock with creditors control, CJ, and then the amount that column is totaled for, right? Then as well, this has an effect on your creditors ledger. So remember, a creditors ledger is a summary of all credit purchases from a specific creditor, right? So let's say our creditor was now ABC Supplies. Then we would have a balance starting at the start of the month for that creditor. So whatever we owed them from the previous month, and then any payments would be debited and any purchases on credit will be credited, right? And then that will give us our balance at the end of this month, starting for next month. Right. So if you want to have a look at this revision and what we just spoke about, you can have a look in your New Era Grade 10 textbook on page 124 to 129. So you're more than welcome to review that in your own time if you feel necessary. Right, and then I want to get to our main lesson today, which is credit purchase returns. So the reason that I explained the revision of credit purchases is because we have to make a credit purchase in order to return it. So what is the theory behind a credit purchase return? So a credit purchase right? We discussed what that is. So let's say we purchase trading stock from ABC suppliers. And when we get back to the warehouse, we are unhappy with the quality of the stock. So we can do one of two things. We can let ABC suppliers know that we want a discount, right? Which will reduce our liability. That would fall also under credit purchase returns, but it will not affect our trading stock, right? But we can also decide to send these trading stock or products back to our supplier, and then we ask them for a complete refund. And this would then fall under as well credit purchase returns. Right. So the two different types is that one will affect trading stock, so cost of sales, um, because we are sending the trading stock back, and the other one will not have any effect on that. It will only decrease our liability because we're only asking for a discount on the debt but not sending the trading stock itself back. Right. So it will obviously decrease the value of the trading stock, but it will not decrease the trading stock amount itself. Right. So then one of the first things that we always look at is what is our source document. Right. So our source document for credit purchase returns is a debit note. Now you would ask me, why is it a debit note if we are working with creditors? So let me explain. If you look at our creditors control um, general ledger account, on the debit side it's a minus, and on the credit side it's a plus because it's a liability, right? So at number one, I showed you that we purchased our trading stock on credit, right? So we credited. Then when we decide to send it back or ask for a decrease in our liability, then it goes to the other side, to the debit side, where we return. And therefore, we debit when we return in our creditor or creditors control, and that is why it is called a debit note. Right, so I'm going to give you a few seconds to just write this down quickly. Okay, so now that you have written this down in your book, I would like to go to the next part. So, you know that we always look at an example first. So, in this example, we say that ABC, we are ABC, purchased 2 chairs from Farm Chair for 200 Rand each on credit on the 2nd. Right. Then we say, upon receiving the chairs, one was damaged and we sent it back and therefore received a debit note 123. Right. So the moment that we see debit note, the reason I highlighted is because the whole source document of debit note indicates to you that this transaction can be identified as a CAJ, a credit purchase return transaction. Right. So now I identify here all the necessary things. So I know who my creditor is, I know what my source document is, and I know my amount. Right. So we say we purchased 2 chairs and they were 200 Rand each, right? So it was a total of 400 Rand. And then we see that one of the chairs were damaged and we sent one chair back, meaning that our total return was only for 200 Rand. So if I now go to my credit allowances journal, this is a format example of our creditors allowance journal. We have got our document number, our day, our creditor, our folio, which is your reference to your creditors ledger, our creditors control, and whatever we purchase. So in this scenario, we purchased equipment, right? Then we fill in that it is debit note number 123 on day 2. Our creditor is Farm Chair. This affects creditors ledger 1, which is allocated to Farm Chair. Our creditors control will decrease by 200, and our equipment will also decrease by 200. Right, so I'm going to give you a second to quickly write this down, and this is the example that you can refer to later on when you are doing your homework or assessment. Right. So now our next part is to see what effect this new credit allowance or credit purchase return has on our general ledger. So if we take into account the two accounts that we were dealing with now in our example, which was creditors control and equipment, if you can refer to your two columns, creditors control and equipment, then you would see that creditors control is a liability, right? So my signs are minus plus, and equipment is a asset, and therefore my signs are plus minus. Right, so if I look at creditors control, firstly, I had a purchase. Right, so here I said to you 31st of January, total purchases CJ, which is my credit purchase journal, 400 Rand. Now I decide to send one chair back. So it decreases my liability by 200 Rand. And why? Because of equipment. Equipment decreases and therefore creditors control will decrease. Then on the other side, we show the credit purchase firstly. So equipment increased by 400 Rand because of creditors. And then we see the return in orange here. And we see that on the 31st of Jan, creditors control decreased my equipment with 200 Rand. Right. So I'm going to give you a quick second to write this down. And it's very important to me that you either use a color pen or black and a blue pen or a highlighter to indicate transaction 1 and transaction 2, because we need to understand that there has to be a credit purchase in order for it to be returned. Right. Then the next thing we are looking at is the effect of this credit purchase returns on our accounting equation, right? So in our accounting equation, we've got our day, our document, our account debited, account credited, assets, owner's equity, and liability accounts, right? So for transaction 1, which is when we purchased, we'll see on the day 2, our document was invoice number, whatever they gave us. Our account debited was equipment, because equipment is an asset and it increases on the debit side. Our account credited was creditors control because it increased my liability. Right, so assets increased with 400 because of equipment, and creditors control increased my liability with 400. Then if I look at transaction number 2, which is my return transaction, I see that on day 2, my document was debit note 123. My account debited will be creditors control because my liability is decreasing with 200. And my account credited will be equipment because my equipment is now decreasing with 200. And that is the effect on the accounting equation. Right, so I'm now going to give you a chance to just write this down. There we go. Right, so now you're able to go to your textbook, page 130 to 135, and have a look there at their explanation of credit purchase returns, right? So if you want more information, you're welcome to look at textbook, your New Era Grade 10 textbook, page 130 to 135. And then now we will take any questions. So if you have any questions about what I just explained, you can raise your hand and I will happily answer them. Right, now I want you to page to task 5.10 in your textbook. This will be my matter of assessment for how well you understood what I just explained about credit purchase returns. So they say in task 5.10 that J. Drew retailers analyze the transactions to the following headings: day, document, journal account, debit and credit, assets, owner's equity and liability. Assume that the bank balance is positive, right? Then at 5.10.2, prepare the following journals in the books of J.D. retailers. So they want you to prepare the creditors journal, creditors allowances journal, which is our new journal, and our cash payments journal, right? And they provide you with the columns there. You'll see in your answer pack that is pre-printed, you already have the answer format with those columns in it. And then at 5.10.3, they ask you to post the following to the accounts in the general ledger. And then they supply the accounts for the general ledger as well as your starting balances or totals, right? So remember that in our balance sheet section, which is our assets, our liabilities, capital, and drawings, we have balances. And in our nominal section, which is all income and expenses, we have totals, right? Then the last part, 5.10.4, they ask you to post this to the creditors ledger. So remember, creditors ledger is your summary of all purchases, payments, and returns, which is now the new part, to a creditor, specific creditor, right? And then 5.10.5, extract a creditors list. So remember, a creditors list is a summary of all your balances of all your creditors at the end of the month, so that you can use it for starting balances for the start of the next month, right? So if we just quickly have a look at our transactions here, I just want to analyze some of them with you. At number day 3, they say bought the following on credit: consumable stores and trading stock. There's 10% trade discount on both items, right? So this will obviously be a CJ transaction. Then paid by EFT 5,000 Rand towards the account of Formax Best Deals. That's a cash payments journal. Sent a debit note. Debit note indicates to us that it is a CAJ, right? Cash allowances journal. Credit allowances journal, sorry. And then at day 7, settled half the amount owing, CPJ. Day 10, bought the following items on credit, CJ, so creditors journal. Day 12, claimed an allowance of poor quality. So there we can once again an allowance, and debit note indicates to us creditors allowances journal. Right. Then on day 15, we can see settled amount owing to Evo Limited. So this will be a cash payments journal. Day 17, Rextra Wholesalers also undertook a repair service, received an invoice, right? So this will obviously be, if we receive an invoice, it indicates to us creditors journal. The owner checked invoice this, and he established that our labor charge was above the standard rate. A debit note, so debit note indicates CAJ. Day 20, Cormac's Best Deal imported stock on behalf of Jade retailers from London. The invoice price was this. So invoice price indicates to us creditors journal. Bought 3 calculators from Evo Limited on credit, creditors journal. Then they say on day 26, send back 1 calculator. So send back and debit note issued indicates to us creditors allowances journal. And day 30, settle the entire amount owing to extra wholesalers. That indicates cash payments journal. Right. So you already have your answer pack that is pre-printed for you to do these journals, general ledger and creditors ledger and list. So I hope that you will find this homework beneficial. Right. So now in the next lesson, if you remember from yesterday's lesson, we are just going to mark our homework task 5.10. So here in front of you, you can see the accounting equation, and you can quickly mark that for yourselves. Remember that we do 1 mark per each block, right? So 1 mark, 1 mark, 1 mark, 1, 2, 3, 4, 5, 6, 7, 8, and you need to have the correct sign, so plus or minus, in front of these 3 columns to get the mark. Right, so that was your accounting equation. Then we have our creditors journal, our creditors allowances journal, and our cash payments journal. Right, something important to note in our creditors allowances journal is that unlike the debtors allowances, we don't have an allowances column, right? So if you remember from yesterday, we have creditors control and whatever we are sending back. So trading stock, equipment, consumables, maintenance and repairs, that reduction in rate, right? Then if we look at our cash payments journal, what's important to me is that you remember that sometimes when we receive a discount upon paying a creditor, so not when we make the purchase, so not a discount on the invoice, but a discount on the payment, it goes into our discount received amount in creditors control, and then your payment should always be equal to your bank. So at the end of the month, if you add your payments column with your discount received column, it will balance out your creditors control. Right. Then we have a look at our general ledger. So we've got all of our accounts here, equipment, trading stock, creditors control. I'll just give you a second to mark that. Right, and then if we look at creditors control specifically, because remember we are busy with our credit purchase returns, in our creditors control on the debit side, because it's a liability, so it will decrease on the debit side, we see the discount received CPJ from the discount we received for paying them, and then our new journal sundry accounts, right? So we like to call it total allowances is CAJ 380 Rand, right? And then if we look at our new column, so this is just your discount received, obviously from your CPJ, very important. And then you'll see that, for example, in maintenance and repairs, which is an owner's equity, decreases owner's equity on the debit side because of an expense. We had our CJ, so our purchase for 490, and then we had our return on the credit side to increase owner's equity again because the expense decreased of 50 Rand. Right, then we have our creditors ledger. Quickly going to give you a second to just mark that. And in our creditors ledger for Cormac's Best Deals, you'll see that we have a CAJ transaction on 12, details debit note D40, and we debited our liability to decrease it by 120. Right, so there's Rextra Wholesalers and Evo Limited. I'm quickly going to give you a second to write that down and make your corrections. Please remember to only make corrections in pencil. And then we have our creditors list, which is a summary of our creditors. So for Rextra Wholesalers, you'll see that we actually don't have anything. And why is that? because we settled our account on the 30th. So you'll see that our balance is 0 at the end of the month. Right. Thank you so much for your positive feedback on the homework assignment. And I think that it went very well, with most of us achieving about 75% for our homework assignment. I'm glad to hear that these assessments that we do at home assists you in laying that good foundation for new transactions.